Good day all. Ira Epstein of Linn & Associates with your metals market update, and this is for your wrap-up for Thursday, the 2nd of January 2020. Boy, does it sound weird saying that, but it's there. So today, the continuation of the Santa Claus rally, and on a seasonal basis, this fits right in where the market keeps accelerating towards that January 3rd to the 7th area, and often the market runs into a bit of a problem in that zone. That doesn't mean it has to. I'm telling you what it's done. Metals still very much under the influence of strong seasonals. You cannot say that gold didn't do well when the dollar's up nearly a half a point. That's a pretty big rally in the dollar. And while the gold closed at 1528.10, the last trades of the day were much closer to 1531.32, and the silver was higher than this, probably in the 1809 area. Now, copper's been everywhere. I was surprised copper was even down, be it Tuesday or today, because you would think that this market's going to get its legs under it, knowing that the U.S.-Chinese trade deal is coming. And any way you want to look at it, that's a better psychology for world trade than where we've been. Market did recover today, but it's an interesting day. It's the day after New Year's. Not everybody's back to work. The traffic, I can tell you, downtown Chicago, light. Volume, I was impressed with the volume today. It wasn't that terrible, so better than I thought it was going to be. When we come to the gold, now the market has finished over this 1526.60 with this 1528.10. So now you've got a market that has made a new high close after this correction, which began in August, carried itself down pretty sharply, $70 or so, and has since come all the way back up. In terms of looking at the daily bar chart, the market is still in an uptrend. It's cleared a hurdle right here that it's had, and that added to the bullishness today. You've had the pattern of higher lows, higher highs. In terms of moving averages, I think I began mentioning to you on Monday that I am expecting the 18-day average to be marching on that 100, looking for ultimately a bullish crossover. Now, that doesn't mean you can't go up and pull back down into these two, but I think that with the bigger picture set in, with the seasonal set in, not seeing anything on the horizon that I think is terribly bearish for the gold market, be it Korea, be it Iran, it doesn't matter. These events are typically friendly to that market, especially, if North Korea fires another missile or Iran wants to go head-to-head with the U.S. in more manners. I don't know. But none of that's bearish, those elements. When you take a look at the Bollinger Band, what I like here is the market is running the band. So yes, it got over it back here the week ago. Then it pulled to the right-hand side, and it's staying to the right-hand side, but running up there. Why? Because you have that embedded reading. And remember what an embedded reading is. Slow stochastics are made up of two lines that crisscross each other. They're called a K line and a D. Don't ask me why. I haven't the slightest idea. But George Linn, who developed this, that's what he called them. I don't even know what a stochastic is. He was trying to define it to me when he was alive, and I used to laugh, go, okay, let's call it a momentum oscillator, and that's what it is. But it's got a unique characteristic that I discovered many years ago. And instead of staying overbought, I call when the K and the D lines, the red and the blue, are going sideways over 80 for a certain period of time, that changes from overbought to locking in a trend until the red line gets back under the 80 level. So I am expecting on pullbacks that pros will be in there buying the market until that event happens. Doesn't mean I'll be right, but that's what I'm expecting. When you come to GLD, you have the embedded reading. You've got the higher lows, higher highs, got over the Bollinger Band, back under it, today back closing right under. 143.95 is today's close, the Bollinger top 143.97. So instead of the market closing outside of the band, it's right literally under it, not outside of it. That's still bullish. The gold-silver ratio has paused at the roughly 84 level, got a little bit of a bounce. Now the question is, if the base metals are going to take off, can you crack that number and start another leg? Often, gold, silver, copper, they try to move together, be it inflation stories, whatever. When we look at GDX, the popular gold miner ETF, the market was up 7 ticks today. Where did it stall again? Do you see this upper Bollinger Band? The high, 29.70, 29.72, today's high. The market finished at 29.35. Again, it's a resistance number. Are we embedded? Well, the answer is not yet. You still need another day there. What about the juniors? Another area to look at. Well, this one looks to me like it is embedding. You need 3 days to do it, and did it. Day one, that was Monday. Day two, both numbers over 80. That was Tuesday, and today, Thursday, you've got your embedded reading. So until you lose that, I still think the trade is buying the market on the pullbacks, even though resistance, back up at that upper band. I expect pros to come out against that. The market came back down, as you can see, 42.39 from 42.94. Reasonable trade for a lot of people that were coming out there. They might buy on the break again. Silver market, you have the embedded reading. Until it's lost, I look for buying support. One of the numbers it might be is the 100-day average. Now, you made a lower low than yesterday today. If the market starts up and through these highs, there might be stop orders waiting for the market. Then I'd be watching the 1832 area, which is the upper Bollinger Band. Copper market, let's take a look at yesterday. We had broken yesterday to 279.60, the 18-day average 279.40. What else? Remember what we talked about, embedded stochastics, and right here the market's still embedded on Monday. You lose it on Tuesday. It often, I want to use this word carefully, not always, often leads to price in the 18-day average running at each other. That obviously happened on that day by itself. It didn't quite hit it. Today, for good measure, it hit it, and then you have an outside day to the upside. So now the question is not taking out today's low. Will the market be able to build against that 18-day average? If you take out today's low, be it on Friday or Monday, I would think that price in the 18, and wherever the Bollinger Band is, might make a run at each other because you'd be under the 18-day average. We'll see. In the platinum market, the market got itself up and running. Now, if we look at the close on Tuesday, the market finished 977.80 after hitting the upper Bollinger Band. It got up, in fact, to 990.70. Today, the market, for good measure, goes back up, settles at 985, right at the Bollinger Band, and it's trying to develop its own bullish embedded reading. And in the palladium market, you got up high enough today to take out 918.60, changing the chart pattern. Now you've got lower highs, higher lows. Well, I'm saying that wrong. A higher high and break lows that are lower. You've broken the pattern of lower highs, lower lows. So you've gone back to a neutral stance in this market. Resistance, 1954.50. Support back at 1885 roughly. And that's what I'll be looking at in that market. In the dollar index, I realized the market came down very hard, but I also told you at year end you get a lot of action that you have to absorb it. Is that the right word? That's about as much as I could say, because a lot of it's noise, and you got to bounce back into the Bollinger Band today. Are we trending is the key word. You have a higher high, lower low. Now, visually, I can see the market's broken down, but in terms of are you making a pattern to trade off of, I don't see it. I see an oversold market that's finding support against the lower band, resistance back up at the 96.85 level. One of the things we do, and I do specifically, is I put out a massive amount of research. And this is research you can view on our smartphone applications. You can view it if you have a tablet, a PC, or an email account, because it all comes right into it throughout the day. And I start you off with a morning subscriber video. Now, let me tell you what that video is about. It's about my trading ideas for the futures markets and temporarily 5 ETFs. All the ETFs are going to move this month of January into another service. And it's going to be my afternoon ETF spider service. And it's going to be just geared to those markets. So you can either try that, not try it, but we know there's a huge market for spiders and ETFs, and I'm going to apply the same thing I do in the morning to that, but after the close, so I don't have to get up that early. We don't open until, if you think about it, 8:30 Chicago time, so I can put out a video at 3:30 in the afternoon when I've got all the settlements in, and my customers will have it, and they can look at it anytime they want before the opening. I think that'll fit in. Then, what we've also got for people, for the futures, I write reports, typically twice a day, Monday through Friday. Friday's one report. Sunday evening, I put out another report. My ideas on the markets It's a short report. It is not meant to be pages long like some of my contemporaries write. You can't write pages every day on the futures markets or any market. You can write it on a specific subject, but I don't want to. I can do that better in the videos. So by doing the videos, I'm not sitting there in a way that you can't see the pictures I want you to see. If you haven't tried my research, this is your opportunity, a free trial. Give my staff a call. You can also go to our website. Under the bottom right, it'll say Ira's free trials. Click on it, give yourself a try. You can sign up for the software as well. We'll be happy to put it in your hands. I'm Ira Epstein. You have a good day. I'll see you tomorrow.